Arthur Hayes' warning came out to be true after Trump's return to the White House could rock the crypto world. With challenges like China's influence and political hurdles, investors are facing a rough ride now. Meanwhile, younger voters and innovators are reshaping politics and Bitcoin's future. In this video, we dive into these major crypto shifts and their impact on the market. Hello everyone, I'm Jay, your host and guide to the exhilarating world of crypto. Stick around because today's adventure is packed with stories that will make your jaw drop. Now, first, like always, be sure to hit the like button down below. It helps us out tremendously with the reach of this video. BitMEX co-founder Arthur Hayes has issued a stark warning. The crypto market is taking a serious hit as Donald Trump already returns to the White House on January the 20th, 2025.
The golden age of America begins right now.
In his year-end analysis, Hayes cautioned that investors might be too optimistic about Trump's ability to introduce market-friendly policies quickly. He explained that even the most efficient government would need years, not months, to tackle deep economic challenges. Hayes also highlighted political hurdles, noting that Trump's slim Republican majority in Congress and the upcoming 2026 midterms make major reforms unlikely. Investors hoping for quick changes might be in for a shock. Adding another layer of uncertainty, Hayes discussed China's influence on crypto. He revealed that Chinese investors are using loopholes like McCall's casino to transfer funds offshore, some of which end up in crypto. If China's central bank increases yen supply, wealthy investors could turn to crypto, driving demand. However, this surge may not last long, with geopolitical tensions and the uncertain fate of Hong Kong's crypto ETFs creating further instability. While Trump's return is now stirring up volatility in the crypto world, one thing is clear: investors should brace for a bumpy ride. Young people are changing the political game with their love for cryptocurrency. A recent Emerson College poll found that nearly 20% of US voters have dabbled in crypto. But the real surprise? Younger generations are leading the change, forming a powerful new voting group that could reshape American politics. A survey conducted from December the 11th to the 13th shows that younger voters are much more into crypto than older ones. It's about 30% of people under 40 have used or invested in crypto, compared to just 20% of those in their 40s, 17% in their 50s, 9% in their 60s, and only 4% of seniors over 70. Interestingly, 57% of crypto users support Donald Trump, who's backed the industry by appointing pro-crypto leaders to key financial roles, including the SEC. This growing crypto-savvy crowd is already making waves in politics. An October 17 survey revealed that around 26 million US voters identify as part of a crypto voting bloc, with 16% saying a candidate's views on crypto are very important to them. Chairman Jerome Powell made it crystal clear that the Fed has no interactions of embracing Bitcoin anytime soon. "We're not allowed to own Bitcoin," he said firmly following the latest policy meeting, signaling that Bitcoin's role in the financial system remains limited by the Fed's current stance. Despite growing interest in the digital asset, Powell's comments reflect a consistent reluctance by traditional institutions to fully integrate cryptocurrency into their portfolios. When asked whether the government might consider stockpiling Bitcoin under President-elect Trump, Powell dismissed the notion. "That's for Congress to decide, but we're not pushing for any changes in the law," he remarked, reinforcing the idea that any large-scale governmental acceptance of Bitcoin would require significant legislative action. Powell's stance has now dampened the excitement surrounding Bitcoin, particularly among its advocates, who were hopeful that the new administration might ease crypto regulations and lessen the heavy hand of government oversight. The surge in Bitcoin's value that followed Trump's election is now met with skepticism, as Powell's remarks suggest that Bitcoin's institutional embrace is not on the horizon. Despite the Federal Reserve's cautious approach, Innovation in the cryptocurrency space continues at a rapid pace. A new wave of young talent is stepping up to shape Bitcoin's future, bringing fresh ideas and perspectives into the world of digital finance. Chaincode Labs, one of the leading organizations in the space, has just launched the first ever Bitcoin scholarship, an innovative that blends education with hands-on experience. This scholarship is not just about financial support, it's about cultivating a new generation of thinkers who are not afraid to challenge the old paradigms. One standout example of this new breed of innovators is 17-year-old Isana Misra, a high school senior from New York City and the youngest ever contributor to Bitcoin Core in its 15-year history. Misra is a trailblazer in the Bitcoin community, having earned the prestigious scholarship after competing against 232 applicants from around the world. The scholarship is a game changer, covering a full year of college for students who contribute to Bitcoin open source projects during the summer. What's even more remarkable is that the scholarship can be renewed, meaning that Misra could potentially fund her entire undergraduate education by working with Bitcoin, allowing her to continue pushing the boundaries of digital currency innovation without worrying about tuition costs. Misra's journey into the world of Bitcoin started long before she was eligible for this scholarship. Even before high school, she had already studied the Bitcoin white paper, set up her own node, and taught herself C++ to contribute to Bitcoin Core, the open source software that powers the Bitcoin network. Her passion for decentralization and blockchain technology led her to intern at both Chaincode Labs and MIT's Digital Currency Innovative, where she worked on privacy-focused technologies like CoinJoin and protocol designed to enhance transaction privacy within the Bitcoin network. While young innovators like Misra are reshaping the landscape, an old-age debate about Bitcoin's fixed supply limit has once again entered the spotlight. The famous 21 million cap on Bitcoin, which has been a defining feature of the digital currency since its inception, is being questioned. Some argue that it's too rigid, especially as Bitcoin continues to gain traction as a store of value and potential alternative to traditional currencies. Can this supply limit really never be changed? As the Bitcoin community grapples with the future of the currency, this question remains a hot topic among both traditional financial experts and cryptocurrencies enthusiasts. In the midst of regulatory uncertainty and ongoing debate about Bitcoin's long-term trajectory, one thing is clear: the future of Bitcoin will be shaped by a new generation of thinkers like Misra, who are pushing the boundaries of what's possible with blockchain and digital finance. The Fed may be staying cautious, but the innovation happening in the Bitcoin space is unstoppable. This debate recently resurfaced after a BlackRock explainer video highlighted Bitcoin's limited supply as a key feature against inflation. However, the video included an expected disclaimer. There's no absolute guarantee that the 21 million cap will stay forever. Could the Bitcoin supply cap ever change? According to Bitcoin developer Super Testnet, it all depends on how Bitcoin is defined. In theory, the cap could be modified if enough of the community miners, node operators, and developers agree on a hard fork. But even if such a change happened, the new chain wouldn't truly be Bitcoin. Super Testnet argues that the inflation cap is crucial to Bitcoin's identity, referencing Satoshi Nakamoto's white paper as the ultimate authority. And before we go, the big question remains: could Hayes' prediction really be happening now? Trump's return, is it really sparking the market crash? Share your thoughts in the comments below.